Hey everybody, it is Colby the DGI Crab here, wishing you a very happy Saturday afternoon or early evening. It's about 6 o'clock here in U.S. Central Time, and I'm just going to do a quick update here. I'll try to do these pretty consistently on either Saturday or Sunday. I'm still working out the schedule, but anytime we have a dividend increase from one of our 60 dividend growth stocks covered on this channel, I will definitely take some time on the weekend to highlight that. So this week we had one. We find out that Kroger, in our tier one stock group for the 18 to 30-year-old investors, has announced a dividend increase of 10.3%. So they have increased that dividend by 12 cents per year, 3 cents per quarter. It now pays out $1.28 per share per year. And as of right now, payout ratio, according to Seeking Alpha, is still sitting at 24.75%. So certainly would appear to be a reasonably safe payout ratio. So as we take a quick look here at some of the dividend numbers, we have Kroger currently yielding well above 2% right now. Actually, I'm jumped a little forward too fast. Let me go back and just double check that. We've got a 2.56% yield. The 4-year average is right at 2%. And if we take a look back at some of the average yields dating back to 2014, we can see that Kroger usually does not yield this high at all. Sometimes it does, but it only goes on sale a certain amount of times. So let's take a look here. We've got a lot of ones, high ones. Sometimes it gets into the low twos on the average yield. If we look at the max yield number, which was basically the most on sale, quote unquote, it had gotten to that point in a particular year. It hit 2.69% at one point in 2029. It's gotten to 2.59 just last year, 2023. And up to this point, the max yield on Kroger has been 247. But now that they have announced this dividend increase, the yield has jumped and it is above that. And we'll just have to wait and see for how long. Now, I had kind of been hoping maybe for a little bit of a bigger increase than that, because Kroger has done larger increases than this pretty consistently for the last few years. If we look back at their annual growth streak here, we could see that there's a couple of years here and there where they just do increases in the single digits, but like 2009 was a brutal year for a lot of dividend growth stocks with a really bad economy, and they were still able to put in a solid 5.8%, followed by a 6.85 in 2010, and then we see primarily double-digit increases, sometimes up in the 20s here and there. 17 and 18, we saw 8%-ish increases. And for the last 5 years, 13, 14, 20, 17. So this year's 10% doesn't exactly feel like a real banger as far as Kroger goes. But I'm not going to gripe and moan and complain if I get a 10% annual increase on the dividend yield of pretty much any of my dividend growth stocks, even here in this tier one category. In tier one for the 18 to 30-year-olds, I'd like for you to average even better than 10%, but 10% certainly is nothing to complain about, especially when it's been yielding above 2% for the better portion of the year. So right now, going into the week, Kroger is just a shade above $50 a share. Again, yielding 2.56%. And I'll be updating the 4-year average yields here on my spreadsheet here in the next couple of weeks. Not a huge difference between 1.99 and 2% even, but that's about where it is right now. And this will be year 17 for Kroger in their dividend increase streak. So feeling pretty good about this one. And the only reason that I can think of just off the top of my head anyway, that maybe this increase was a little bit more on the conservative side by Kroger standards, even though the payout ratio in the low to mid 20s would lead us to think that they had room to do more like a 13, 14, 15% increase. We have to remember they did basically acquire Albertsons, another large grocery chain, in a merger. So perhaps management just decided to give a good increase that wouldn't necessarily agitate or worry the shareholders, but maybe not. Maybe they just decided not to go quite as hard into the increase as maybe they otherwise would have, just to make sure that that everything with the merger goes relatively smoothly, and they're maybe waiting until the dust settles a little bit before they get back to doing stronger increases. But huge grocery chain, $36 billion market cap. Consumer spending has definitely down a bit, getting more and more conservative as time goes on here in 2024. But people have to buy groceries. You have to have food. You have to have toiletries and basic medicines and things like that. Kroger has not only the grocery store locations, but they also have a fair amount of Kroger brand products that are sold in the stores as well. And it is definitely a quality company that I'm very happy to have on this list, especially for the 30 and younger crowd. But even for myself in the tier 2 range, in the 31 to 41-year-old range, I'm getting a starting yield of above 2.5% right now. And the range I really want in that age group is about 225 at the low end, but hopefully closer to 3. But above 2.5, that feels pretty good, especially to get something that more often than not has compounded that dividend and grown it by 10% or more very, very consistently. So congratulations to Kroger shareholders. I may be taking a closer look at this one this week. I may trickle in a little bit more money into this position. Haven't fully decided yet, but this is sort of what the weekend's all about, just to let the dust settle in the market, see where everything stands, and make sure that there aren't any announcements of increases or decreases that we need to be aware of going into the week that might change our minds about some of our strategies on an individual company. So again, congrats if you are a Kroger shareholder, and if not, maybe take a look at it and see if it makes sense for your portfolio. And I will say I'm not a professional investment advisor or licensed professional in any way. These opinions and this strategy, it's my own. It's something that I like and that I believe in, but you should always do your own due diligence and not invest in any stock or ETF or any kind of security until you are comfortable and you've done your own research. So my name is Colby, the DGI Crab. You can email me your questions at dgicrab@yahoo.com. I hope you'll like the video and subscribe to the channel. And take a look at the video description where I post links to a video covering each of the 4 tiers of stocks that I've broken down into age categories. So if you want to understand why each stock I cover on this channel made the list and why I put it in specific age tiers, just take a look at those links, and I do a little bit of a deeper dive to review why the lists are constructed the way they are. So everyone, I hope you have a great weekend. I'm going to sign off right now, and I hope you all are ready to start investing again first thing Monday.